Bitcoin, the world's first decentralized cryptocurrency, has emerged as a revolutionary digital asset that has gained immense popularity and value since its inception in 2009. Its rise to prominence has been accompanied by a multitude of factors that contribute to its perceived value, making it a topic of great interest and debate. In order to comprehensively explain the reasons behind Bitcoin's value, we need to delve into its technological foundations, economic principles, societal impact, and the unique attributes that set it apart from traditional currencies and investment assets. Introduction to Bitcoin. Bitcoin, created by an anonymous person or group of people known as Satoshi Nakamoto, introduced the concept of a peer-to-peer electronic cash system. It operates on a decentralized network called the blockchain, which serves as a public ledger to record all Bitcoin transactions. The blockchain technology ensures transparency, security, and immutability of transactions, eliminating the need for intermediaries like banks or governments to facilitate transactions. Scarcity and limited supply. One of the fundamental factors contributing to Bitcoin's value is its scarcity. Unlike traditional fiat currencies that can be printed at will by central banks, the supply of Bitcoin is limited. The total number of Bitcoins that can ever exist is capped at 21 million. This predetermined scarcity is embedded in Bitcoin's code and is enforced by the consensus rules of the network. Scarcity adds value to an asset because it implies that demand may exceed supply, leading to potential price appreciation. As more people recognize Bitcoin's scarcity and desire to own a portion of this limited supply, the perceived value of each Bitcoin increases. The scarcity feature is further reinforced by the halving events that occur approximately every 4 years, reducing the rate at which new Bitcoins are created and introduced into circulation. Decentralization and trust. Bitcoin's decentralized nature is another crucial aspect contributing to its value proposition. Traditional currencies are controlled by central authorities like central banks, which can manipulate the money supply, impose capital controls, or implement policies that impact the value of the currency. In contrast, Bitcoin operates on a decentralized network of computers called nodes, where no single entity has control over the network. Decentralization ensures that no single point of failure exists, making Bitcoin resistant to censorship and manipulation. Transactions are verified by network participants through a process called mining, where specialized computers compete to solve complex mathematical problems. This decentralized consensus mechanism, known as proof of work, provides security and trust in the system without relying on a central authority. Security and immutability. Bitcoin's underlying technology, the blockchain, plays a vital role in enhancing its value. The blockchain acts as a transparent and immutable record of all transactions ever conducted on the network. Each transaction is grouped into a block and added to the chain in a chronological order, creating an unbroken sequence of transactions. The immutability of the blockchain ensures that once a transaction is recorded, it cannot be altered or reversed without consensus from the network participants. This feature enhances security, eliminates the risk of fraud or double spending, and provides a high level of confidence to users. Bitcoin's robust security and immutability have made it an attractive option for individuals and institutions seeking a reliable and transparent financial system. Global accessibility and financial inclusion. Bitcoin has gained popularity as a global digital currency that transcends borders and provides financial access to individuals who are unbanked or underbanked. Traditional banking systems can be inaccessible to large segments of the population due to factors such as lack of infrastructure, high costs, or inadequate documentation. Bitcoin allows anyone with an internet connection to send and receive value without the need for a bank account or other financial intermediaries. This global accessibility is particularly valuable in regions with volatile economies, high inflation rates, or limited access to traditional banking services. Bitcoin provides an alternative store of value and a medium of exchange, empowering individuals to take control of their finances and participate in the global economy. As the demand for financial inclusion continues to grow, Bitcoin's value as a tool for empowerment and economic freedom increases. Store of value and digital gold narrative. Bitcoin has often been compared to gold, primarily due to its attributes as a store of value. Like gold, Bitcoin is fungible, divisible, and can be transported easily. However, Bitcoin has advantages over gold in terms of portability, divisibility, and verifiability. While gold is physical and subject to storage and transportation costs, Bitcoin exists purely in a digital form and can be stored and transferred easily across the globe. The concept of Bitcoin as digital gold has gained traction as investors and individuals view it as a hedge against traditional financial systems, economic uncertainties, and inflation. The scarcity of Bitcoin, coupled with its decentralized and secure nature, makes it an attractive long-term store of value. This perception has been reinforced by institutional adoption, with companies and asset managers adding Bitcoin to their investment portfolios as a diversification strategy. Network effect and adoption. Bitcoin's value is closely tied to its network effect, the phenomenon where the value of a network or platform increases as more users join and utilize it. Bitcoin's early adoption by enthusiasts and technologists has paved the way for wider acceptance and recognition by individuals, businesses, and institutional investors. As more people adopt Bitcoin, its liquidity, utility, and acceptance as a means of payment increase. The network effect also contributes to Bitcoin's value by creating a robust ecosystem of supporting services, including exchanges, wallets, payment processes, and other infrastructure. This growing network effect reinforces Bitcoin's position as the dominant cryptocurrency and adds to its perceived value as the preferred digital currency. Macro factors and economic uncertainty. Bitcoin's value is also influenced by macroeconomic factors and global economic uncertainties. Traditional financial markets are susceptible to inflation, geopolitical tensions, government policies, and economic crises. Bitcoin, with its limited supply, decentralized nature, and global accessibility, is viewed by some as a hedge against these risks. During times of economic instability or when faith in traditional financial systems wavers, individuals and institutions may seek alternative investments or stores of value. Bitcoin's decentralized and non-correlated nature makes it an attractive option for diversifying investment portfolios and hedging against potential risks. Speculation and investor sentiment. Lastly, it is essential to acknowledge that speculation and investor sentiment play a significant role in determining Bitcoin's value. As with any asset, market dynamics, investor psychology, and sentiment can drive significant price fluctuations. Bitcoin has witnessed both dramatic price increases and sharp declines, often driven by factors such as regulatory announcements, news events, or market speculation. The relatively young and evolving nature of the cryptocurrency market, combined with the limited history of Bitcoin's price performance, contributes to its inherent volatility. While this volatility can create opportunities for traders and investors, it also introduces risks and challenges for those seeking stability. Conclusion. Bitcoin's value is derived from a complex interplay of technological, economic, and socio-political factors. Its scarcity, decentralized nature, security, and immutability contribute to its appeal as a store of value and a medium of exchange. Bitcoin's global accessibility and potential for financial inclusion empower individuals in underserved regions. The narrative of Bitcoin as digital gold and its adoption by individuals, businesses, and institutions further strengthens its position. Macro factors, economic uncertainty, and investor sentiment also influence its value. Ultimately, Bitcoin's value lies in its ability to offer an alternative financial system that challenges traditional norms and empowers individuals in the digital age.